I tracked my bank fees for 1 full year once. Not because I was being responsible. I did it after I noticed a $35 overdraft charge on a $4 coffee. That sent me down a rabbit hole. Monthly maintenance fees, out-of-network ATM charges, paper statement fees, low balance fees. By the end of the year, I had paid my bank $312 for the privilege of storing my own money with them. Not one of those fees helped me. Every single one of them was engineered to be small enough that I wouldn't notice, but consistent enough to add up. Here's how traditional banks actually make money. They take your deposits and lend them out at higher interest rates. That spread is called net interest margin. But fee revenue has become enormous. In 2023, U.S. banks collected approximately $7.7 billion in overdraft and non-sufficient funds fees alone, according to the Consumer Financial Protection Bureau. That's down from $15 billion in prior years, but it's still a massive revenue stream built entirely on catching people in vulnerable moments with low balances. The most common fees and what they actually cost you. Monthly maintenance fee, $12 to $25 per month if you don't maintain a minimum balance. Overdraft fee, $25 to $35 per transaction, sometimes charged multiple times per day. Out-of-network ATM fee, $3 from your bank, plus $3 to $5 from the other bank's ATM. That's an $8 fee to access $40 of your own money. Paper statement fee, $2 to $5 per month. Wire transfer fee, $15 to $30 per domestic transfer. None of these services cost the bank anything close to what they charge you. Overdraft fees are the most predatory fee in banking because they hit hardest when you're already struggling. Here's the system. Your bank processes transactions in an order designed to maximize overdrafts. Large debits often clear before small ones, even if the small ones came first. This means one large transaction can wipe your balance and cause 5 small ones to overdraft separately, 5 fees instead of 1. Some banks have ended this practice after regulatory pressure, but many still do it. Read your account agreement. The minimum balance requirement trap is subtle. Your bank says no monthly fee if you maintain $1,500 in your checking account. That sounds fine until you realize $1,500 sitting in a checking account, earning 0.01% APY is costing you money. A high-yield savings account would pay you 4.5 to 5% on that same $1,500. That's $67.50 per year. You're forfeiting just to avoid a $10 monthly fee. You're paying a fee either way. One is visible, one isn't. Online banks and credit unions have fundamentally different fee structures. Banks like Ally, Marcus, SoFi, and Discover's online banking division offer checking accounts with 0 monthly fees, 0 minimum balance requirements, and ATM fee reimbursements of $10 to $15 per month. Credit unions, which are member-owned nonprofits, typically have lower fee structures across the board. The product is identical, FDIC or NCUA insured, same debit cards, same ACH transfers. The only difference is how much of your money leaves via fees. The simplest immediate fix. Call your bank today and ask them to waive your monthly maintenance fee. Banks do this constantly to retain customers who threaten to leave. If you've been a customer for more than a year, you have leverage. Ask for a fee-free account tier. Ask for overdraft protection linked to your savings account instead of the $35 overdraft coverage they defaulted you into. Most people don't call because they assume the answer is no. The answer is yes, far more often than you'd think. If you're serious about eliminating bank fees entirely, open a checking account at an online bank with ATM reimbursement and keep your traditional bank account open only as a backup. Use direct deposit at the online bank. Most unlock all fee waivers and perks with a qualifying direct deposit. For ATMs, use your online bank's fee reimbursement. For anything requiring a physical branch, cashier's checks, notarized documents, large cash deposits, the traditional bank is still there. You get the best of both without paying for either. Set up low balance alerts on your checking account, typically at $100 or $200 above your typical floor. This eliminates most overdraft risk without opting into the bank's overdraft coverage product, which is basically a $35 loan on a $4 purchase. If your bank charges for alerts, that's another red flag. Also, turn off paper statements immediately. There is no reason you need physical mail that costs you $2 to $5 per month from a service that should be providing it for free. Bank fees are a tax on not paying attention. Once you see the system, you can opt out of almost all of it with a few phone calls and one account change. The money you save goes directly to your bottom line, not your bank's revenue. If you want to put those savings to work, my video on high-yield savings accounts breaks down exactly where to park your emergency fund so it's actually growing while you sleep. That's the next step after you stop giving your bank free money.